What if one of the most powerful political figures on earth just made a quiet move into Bitcoin infrastructure? And almost nobody noticed? Not a speech, not a tweet, not a campaign promise. An actual financial position, documented, official, quietly buried inside government disclosure filings. And the moment people started connecting the dots, a very uncomfortable question started circulating. Does Trump know something big is coming for Bitcoin? Because here's the thing. This isn't happening in a vacuum. This is happening while America's national debt is spiraling past $36 trillion, while the Federal Reserve is under enormous pressure, while global liquidity is beginning to shift again, and while institutional money is flooding into Bitcoin at a pace we've never seen before. So ask yourself this. When one of the most powerful men on the planet quietly increases his exposure to Bitcoin infrastructure right now, is that a coincidence or is it a signal? Stay with me until minute 14 of this video, because what I'm about to show you changes the entire way you're probably thinking about Bitcoin right now. Quick note before we go further, nothing in this video is financial advice. Do your own research. This is purely an educational breakdown of what's happening and why it matters. Now let's get into it. And if this is your first time on the Wealth Continuum, subscribe right now, because what's unfolding inside the Bitcoin ecosystem right now is one of the most important financial stories of this decade. And most people are still completely asleep to it. Let's start with the facts, because this story began with something most people would have ignored completely, a routine government filing. In early 2026, official financial disclosure documents from the United States Office of Government Ethics, the OGE, revealed something that quietly lit up financial circles. President Donald Trump reportedly purchased shares in MARA Holdings, one of the largest publicly traded Bitcoin mining companies in the world. This wasn't rumor. This wasn't speculation. This came directly from official disclosure paperwork. The documents revealed a purchase range between $15,000 and $50,000. Now, before you say, that's not a massive number, stop, because that completely misses the point. The size of the position isn't the story. What he chose to buy is the story. MARA Holdings is not some random crypto startup nobody has heard of. This is a company that sits at the very center of the Bitcoin mining infrastructure ecosystem. This is a company whose entire business model rises and falls with Bitcoin, and when one of the most influential political figures on earth decides to get exposure to that company, right now, in this moment, that is not something you brush off. But here's where it gets even more interesting. These disclosures didn't just reveal the MARA purchase. They revealed something much bigger. The documents showed transaction activity from Trump ranging between $220 million and $750 million across major securities. We're talking Microsoft, Meta, Nvidia, Oracle, Goldman Sachs, Bank of America, Apple, Broadcom, and S&P 500 index funds. This man was moving serious institutional level capital, and sitting quietly inside that enormous financial portfolio was one Bitcoin mining company. Think about that for a second. One specific crypto-connected company, among the biggest names in American finance. Morning, afternoon, or night for you right now, drop it in the comments below. Because wherever you are in the world, this story is relevant to you. Now, why does this matter? Because this isn't happening in isolation. At the exact same moment these disclosures were released, Trump's administration had become the most openly crypto-friendly administration in American history. His family had launched crypto-related projects. Crypto donations were being actively embraced politically. Regulatory debates around digital assets were exploding in Washington, and institutional Bitcoin ETFs were accumulating supply at a rate that was quietly shocking the market. So, when investors saw MARA Holdings sitting inside those disclosures, they didn't see a random trade. They saw a pattern. A pattern that suggests something much larger is quietly building underneath the surface of this market. And here's the question that nobody's asking loudly enough. Why MARA specifically? Hold that question. Because the answer reveals something important about where smart money believes this market is actually heading. To understand why this matters, you need to understand what MARA Holdings actually represents. Because this is not just a company, it's a thesis. MARA Holdings is one of the largest Bitcoin miners in the United States. Their entire existence is built around one thing: accumulating and mining Bitcoin. They deploy massive computing infrastructure, consume significant energy resources, and operate at a scale that would have seemed impossible just 5 years ago. And Bitcoin miners are not passive investors. They are the backbone of the entire Bitcoin network. Because miners secure the blockchain, process every transaction, support the decentralization that makes Bitcoin resistant to government control, and they accumulate large Bitcoin reserves in the process, which means when you invest in a Bitcoin miner like MARA, you are making a leveraged bet on Bitcoin itself. If Bitcoin doubles in price, mining companies often move even faster. That's not theory. That's how it has played out historically across multiple Bitcoin cycles, and Wall Street has been watching this closely. But here's the layer most people miss. Bitcoin mining has quietly become a geopolitical issue, and this is exactly why it matters right now. Because mining now connects directly to energy policy, artificial intelligence infrastructure, power grid expansion, national competitiveness, and digital economic dominance. These are not fringe concepts. These are the central debates inside Washington and inside the boardrooms of the world's largest asset managers. And here's where the Trump angle becomes very powerful. His administration has positioned itself as pro-energy, pro-American industrial dominance, anti-regulatory overreach, and increasingly pro-Bitcoin infrastructure. So when a political figure with that profile gains direct financial exposure to one of America's largest Bitcoin mining operations, you have to ask yourself what he's actually seeing. Because the United States is now in a direct competition with China, Europe, and emerging market economies over artificial intelligence, semiconductor dominance, energy leadership, and digital finance. And Bitcoin mining sits directly at the intersection of all four of those races. Hit like, if this is starting to make sense, because we're only just getting started. Now here's the part nobody is paying attention to. This investment may not just be about Bitcoin's price. It may reflect how Bitcoin infrastructure is now being viewed as strategically important to American economic dominance. The same way oil pipelines were strategic. The same way semiconductor fabs are strategic. The same way internet infrastructure was strategic. Bitcoin mining infrastructure may quietly be entering that same category. And if that's true, what happens to the price of Bitcoin and the companies built around it when that realization finally goes mainstream? But here's where the story becomes genuinely explosive, because the moment these disclosures hit public view, Washington erupted. Democratic lawmakers had already been raising concerns about Trump and his family's involvement in crypto-related activities, and when MARA Holdings showed up inside the disclosure paperwork, it became ammunition in a much larger political battle. Critics immediately pointed to the Clarity Act discussions that were already underway, and they demanded what's now being called the Ethics Clause, stronger rules to prevent politicians and their families from holding financial exposure to the very industries they're helping regulate. The argument from critics is straightforward. If you hold shares in a Bitcoin mining company, and then you make policy decisions that benefit Bitcoin mining companies, is that a conflict of interest? That debate is now genuinely dividing Washington. And it is only going to get louder. But here's what I want you to think about carefully, because this is where smart money is already moving. That political controversy, regardless of which side you're on, is actually one of the most bullish signals imaginable for Bitcoin. Stay with me on this, because think about what that controversy tells you. It tells you that politicians are now fighting passionately over Bitcoin exposure. If Bitcoin were irrelevant, Washington wouldn't care. If crypto were truly a passing trend, nobody would be writing ethics clauses about it. The fact that regulatory conflicts, disclosure debates, and congressional battles are now happening specifically because of digital asset exposure tells you that Bitcoin has already crossed a threshold. It is no longer a peripheral asset. It is inside the power structure, quietly, officially. And once something enters the power structure, it almost never leaves. Comment below. Do you think political elites are quietly positioning themselves before the next Bitcoin supercycle? I want to know where you stand on this. Now, here's what's even more important. The political battle over crypto regulation in America could determine which companies survive and which ones get crushed, where capital flows in the next bull cycle, how stablecoins interact with the global dollar system, how Bitcoin mining gets regulated or protected, and ultimately, whether the United States becomes the dominant force in global digital finance or cedes that position to other nations. These are trillion-dollar questions, and powerful people are now taking sides, which means the stakes inside the Bitcoin market just got significantly higher than most retail investors seem to realize. But this is where things start to break down, because there's a part of this story that goes even deeper than politics and personal investments, and it has to do with why the wealthiest and most connected people in the world aren't buying Bitcoin directly. They're buying something else entirely. Here's something most retail investors genuinely don't understand about how institutional money operates. When truly large capital enters a market, it rarely goes straight into the asset itself. Instead, it moves into the infrastructure surrounding the asset. Think about gold. The biggest fortunes made during historic gold rushes weren't made by the miners digging. They were made by the people selling the pickaxes, the infrastructure, the supply chains. Bitcoin is no different. And this is exactly why it matters right now. When sophisticated institutional capital wants Bitcoin exposure, it often flows into Bitcoin mining companies, Bitcoin treasury corporations, crypto infrastructure firms, payment companies with digital asset exposure, exchanges with regulatory moats, and financial vehicles that provide leveraged upside to Bitcoin's long-term trajectory. Why? Because these vehicles can provide explosive leverage to the Bitcoin price narrative. If Bitcoin appreciates 50% in a cycle, some Bitcoin adjacent companies can move 200, 300, even 400%. That's not speculation. That's how it has functioned historically. And that's exactly why Wall Street analysts watch MARA Holdings, Strategy, CleanSpark, Riot Platforms, and others so carefully. Because institutional exposure to Bitcoin mining infrastructure often signals long-term directional conviction on the entire ecosystem, not just short-term trading. And here's the part that should make you think. When a political figure with access to the highest levels of economic intelligence makes a documented official purchase of a Bitcoin mining company during a period of enormous global financial uncertainty, that's not a careless weekend trade. That's a decision made with context most of us don't have access to. Are you positioned right now, or are you just watching? Because the difference between those two positions could look very different 18 months from now. Now, let me show you the global picture, because this story only makes complete sense when you zoom all the way out. Zoom out internationally for a moment, because what's happening in Washington around Bitcoin is not happening in isolation. It's part of a global repositioning that is quietly accelerating. Countries around the world are watching Bitcoin with a level of seriousness that would have seemed impossible just 3 years ago. Here's why. The last 50 years of global economic power were built on a very specific foundation: oil dominance, manufacturing scale, military reach, reserve currency control. But something fundamental is shifting. The next era of global power is increasingly being built on artificial intelligence infrastructure, compute capacity and energy grids, digital financial systems, and control over decentralized monetary networks. Bitcoin sits directly at the center of that conversation. And this is not theoretical anymore. El Salvador made Bitcoin legal tender. Multiple Gulf states have begun developing Bitcoin-friendly regulatory frameworks. Asset managers across Asia are quietly accumulating Bitcoin through regulated vehicles. European institutional investors have begun treating Bitcoin as a legitimate portfolio diversifier at scale. And in the United States, the Bitcoin ETF revolution that began in 2024 has been absorbing supply at a rate that has genuinely shocked even long-term Bitcoin believers. The numbers, as of mid-2026, show institutional ETF accumulation reaching levels that are meaningfully reducing the available liquid supply on exchanges, which brings us to a concept that changes the entire mathematical picture of this market. Share this with someone who needs to see this before it's too late. Because what I'm about to explain is the part most people won't hear until the move is already over. Bitcoin has one property that no government, no central bank, and no political figure can change: absolute scarcity, 21 million coins. That's the hard limit written into the protocol. It cannot be inflated, it cannot be printed, it cannot be quantitatively eased into irrelevance. And in April 2024, the most recent Bitcoin halving cut the rate of new Bitcoin issuance in half again, meaning the flow of new Bitcoin entering circulation is now the slowest it has ever been in the asset's history. Now, hold that thought, because here's where it gets uncomfortable for anyone who is sitting on the sidelines. At the exact same moment that new Bitcoin supply is being reduced to its lowest level ever, institutional demand is accelerating. Bitcoin ETFs in the United States alone are accumulating thousands of Bitcoin per week through consistent inflows. Corporate treasury strategies, pioneered by Strategy and now being adopted by smaller companies globally, are removing supply from circulation permanently. Sovereign wealth conversations about Bitcoin as a reserve-adjacent asset are no longer fringe discussions. And now political figures with access to intelligence most of us don't have are quietly taking positions inside the ecosystem. So you have shrinking supply, growing institutional demand, expanding sovereign interest, political validation from the highest levels of power, and a global monetary environment where debt levels and deficit spending across major economies are making traditional safe haven assets look increasingly vulnerable. Do you think the system as we currently know it can actually hold? Think about it seriously. Because if the answer is no, then the question becomes not whether to pay attention to Bitcoin, but how quickly you need to understand what's actually happening. Now, here's the part I want you to sit with. Here's the honest truth. The real story of this Trump MARA Holdings disclosure has almost nothing to do with Donald Trump personally. That's the surface headline. The real story is what it signals about where we are in the broader arc of Bitcoin's adoption. Because just 5 years ago, Bitcoin was still being described as a speculative toy by mainstream financial media. Central bank economists were dismissing it publicly. Institutional investors were warned against touching it. Politicians refused to associate with it. Now, banks are competing for Bitcoin ETF market share. The world's largest asset manager, BlackRock, runs one of the most successful ETF launches in financial history, built around Bitcoin. Fortune 500 companies are adding Bitcoin to their corporate balance sheets. And now sitting inside the official financial disclosure of an American president is a Bitcoin mining company. This is what the end of the first phase of Bitcoin adoption actually looks like. Not fireworks, not a viral moment. Just quiet, official, documented positioning by the people who have always moved first in every major financial shift in history. And here's the thing about those people. They don't announce their moves. They make them quietly. While everyone else is distracted by the noise, the banks didn't announce they were moving into Bitcoin ETFs out of generosity. Corporations didn't add Bitcoin to their balance sheets because they love decentralization. Political figures don't purchase Bitcoin mining exposure because they find the technology interesting on an intellectual level. They make these moves because someone, somewhere, ran the numbers, and the numbers told them something. That the next chapter of the global financial system may look radically different from the last one. And if you're not paying attention to that shift right now, you may be building your financial future on assumptions that are already becoming obsolete. Subscribe right now if you want to stay ahead of what's coming, because the next phase of this story could unfold faster than most people expect. So let's bring this all the way back together. This is not just a story about a government disclosure filing. This is not just about Donald Trump. And this is definitely not just about one Bitcoin mining company. This is a story about where we are in the largest financial transformation most of us will experience in our lifetimes. And the signals are quietly stacking up. Institutional money is accumulating. Political figures are gaining exposure. Supply is shrinking at the protocol level. Global liquidity could be on the verge of another major expansion cycle. And the countries, institutions, and individuals who understand what Bitcoin represents in this specific moment in history are positioning themselves accordingly, while most retail investors are still debating whether Bitcoin is real. So here's the one question I want to leave you with tonight. What would you do if this actually plays out exactly the way the smart money seems to be betting it will? Not in 5 years, not in 10, but in the next 12 to 24 months. Would you look back at this moment and wish you had paid closer attention? Or would you be glad you understood what was happening before it became obvious to everyone? Because the most expensive position in markets isn't a losing trade. It's being on the sidelines when the move finally happens. And right now, the window between early and obvious may be closing faster than most people are ready to admit. If this breakdown gave you something to think about, something that changes the way you're looking at this market, hit subscribe right now. Because the wealth continuum exists for one reason: to make sure you understand what's happening in the financial world before it becomes yesterday's news. The next video I'm putting together goes even deeper into how global liquidity cycles could interact with Bitcoin's supply dynamics in the next 18 months. And trust me, you don't want to be late to that conversation. Subscribe, and I'll see you there.